Joining me now is Structured Finance Association CEO Michael Bright. Michael, good to see you. So listen, we've seen a lot of volatility. We're now in bear market territory. How low does this market go? Your expertise.
Sean, great to be with you. Thanks for having me on. Look, this volatility that we're seeing, that's really been a dynamic of the market all year. That is a function of the fact that inflation's at 8.7%, 8.9%. I mean, exceptionally high relative to the 2% level that it's supposed to be at. And the Fed is having to fix it, and it's having to fix it in a hurry. And really, the markets don't know how high they're going to have to go and how long they're going to have to stay at elevated levels. But we're just not where we need to be yet. And so, we're chopping a lot of wood here in a pretty short amount of time, and it's causing a lot of volatility in our markets, as you see.
And you expect volatility to continue?
Yeah, I mean, until really you start to see CPI and PCE, these other inflation gauges, on a very clear trajectory and glide path back to the 2% level that the Fed needs. I mean, it's going to be every single time there's a piece of data out, the market's going to whipsaw all around, and we're trying to sort of find our footing. Meanwhile, you've got mortgage rates that just in the last 3 months have gone from 3% up to now approaching 7%. And so you've got a real sticker shock for prospective home buyers. Home buyers are looking at, massive increases in what it would cost to buy that house. And so, everyone's really trying to sort this thing out, and the markets are no exception. I mean, the markets are a function of the value of all the underlying companies, and all of that stuff changes as interest rates change, and interest rates are changing very, very quickly.
Michael, you mentioned the 30-year mortgage rate above 6%, pushing 7%. Today's Case-Shiller report showing home prices cooling in July at the fastest pace since the 1980s. You're a housing guy. Where do you see the housing market going?
Yeah, we're definitely in the midst of a housing market correction. Now, housing is one of the most out of whack supply-demand imbalances that we have in our economy, and we have not invested adequately in affordable housing in the United States for the better part of 2 decades. And so, as anybody knows, housing just keeps getting more and more unaffordable. There's actually potentially some good news just in the fact that, you'd like to see the rate of increase of home prices slow. That's good, but it's not good that it's happening because interest rates are at 6%. I mean, that's not really the way you want to do it. You really want to do it with additional housing supply. And so that's one of the policy mistakes I think that's been plaguing our economy for a while.
So because we don't have enough supply, but rates are rising, you look to the future, and we're not going to see an 08-esque housing downturn, are we?
No, I mean, I'm not in that type of a camp. I mean, we're not going to, national home price declines that are based on speculative bubbles bursting. That's not what I am foreseeing, again, because of the supply-demand imbalance that we still have. But housing's, it's a really big part of our economy. It's obviously a big part of any household purchase. And so that market needs to find its footing as well. And that's not going to happen until those interest rates find their footing, which itself is not going to happen until we get inflation under control. So really, all these things are tethered back to the fact that inflation went really, really high. We thought it was transitory, or people said it was going to be transitory. It has since turned out to not be transitory, and now we're undoing a whole lot of stimulus at a very fast pace.
Michael, you're talking about inflation, and I look at globalization and how we've outsourced the production, everything around the world. What impact has globalization had on our inflation numbers, but also on our ability just to produce goods in our supply chain? Your take?
Yeah, no, that's actually a really good question, and it's part of the story. So, yeah, I don't know too many people who think that the 20 years since China ascended to the WTO have played out exactly the way we wanted. Okay, so that has not turned out, to deliver all the benefits that I think everybody had hoped. And what we're dealing with now is sort of a really rapid unwinding of that, as Xi Jinping has embraced the zero COVID policy, as they're saber rattling over China and Taiwan. This is going to put any company that relies on manufacturing from China on edge. And in the short term, what it means is any product that you're trying to buy that comes, or parts of it come from China, the prices are going up and the time to get it is longer. Over the long run, the dream scenario would be that we figure out how to manufacture things, with countries that we can rely on more, bring more manufacturing back to the United States. All that needs to happen, and it would actually be a positive development for the economy, but it's going to take time, and we're really dealing with the pain of that transition right now in a pretty acute way.
Michael Bright, let's bring our jobs home. Let's bring our businesses back home to America. It's going to be, it's great for the American family. It's great for money into the federal coffers and tax revenue. Great idea. Michael Bright, always smart. Thanks for joining me.